I don't really necessarily buy learning from failure. I think you learn way more from success. We sat down for a couple of years and just had a lot of conviction. If what we're building will solve a bunch of problems. Which problems? Like, we don't know.
Erik Bernhardsson was Spotify's 40th employee. He built Spotify's recommendation engine as a side project and grew a 400-person engineering team at one of the fastest scaling fintechs ever. In 2021, he started Modal with just 5 people and spent 2 years building deep AI infrastructure. Then, stable diffusion dropped, and everything changed. Revenue went from hundreds to hundreds of thousands almost overnight. And today, Modal is valued at over $2.5 billion and is used by companies like Mistral, Ramp, and Scale AI.
Humans are the root cause of everything. Everything bad or good that happens at a company is like downstream from hiring good people that can make those decisions and do the right things. People have all these like random ideas of what they want, but often that's not exactly what they need. Don't build what they're asking for. The whole point of a startup is like come up with a solution that people didn't really think of and then put it in front of customers.
In this episode, you can expect to learn about how to build a deep AI native company, how to grow a company from 10 to 10,000 people without it destroying itself, and how to decide what problem you should solve, and so much more.
I love like taking a problem that people think is really hard. I kind of scratch the surface and I realize like, yeah, it's kind of hard, but not quite as hard as people think. To me, that's really exciting. What's a moat of a startup? There is no moat. It's just...
I'm super curious. You studied physics, right? That doesn't seem like the natural starting point for the company you're building now. Or can you walk me through why you decided to do that?
Honestly, I grew up coding. I was coding my whole life since I was 8 or something like that. And I did a lot of programming competitions. So I kind of felt like, and this is maybe me having like, being like arrogant or something, but like when I started university, I was like, I kind of already know how to code. So I felt like maybe I just studied something else. And I mean, I was also into math and physics too. I did a lot of like math and physics competitions too, but I was better at coding. And yeah, I actually don't regret it at all that I studied physics. It gives you a very wide, big like sort of toolbox that you know, a lot of different tools that helps you understand the world and think, and gives you a lot of like kind of mental models that are very valuable for a lot of different things.
And would you do the same choice now with AI and software engineering?
I mean, probably, I think even more so, right? Because like, I feel like the computer science is even less in a way important, right? Like a lot of what you study with computer science is like build a compiler, build a file system. Like, I don't know if you, like, I think it's like helpful to understand some of those stuff. Like I didn't take it. You definitely don't need to study things like object-oriented programming, but like all the stuff you learn in physics, like control theory, feedback loops, like you learn like statistics, like stuff like that. I mean, especially in Sweden, like physics is very like math heavy. It's probably all over the world actually. But I think all of those like things you learn are like quite valuable in themselves.
How does that translate to because you're in a really interesting position. You've got a pretty technically difficult product, but you're also as the founder in a position where you have to manage people, you have to hire people, you have to manage internal stakeholders.
Yeah, those are systems.
Okay, interesting. How do you what sort of frameworks do you use then, like frequently?
I do feel like there's like sometimes a little bit like over, people like take them to like physics toolbox and they're trying to apply it to everything. Like obviously like, something as complex as humans, like you can't reduce like math, but like, I don't know, like I think a lot in terms of like prioritization, like how should we like prioritize things? Like I have like kind of like frameworky type thing in my head. I think in terms of like, how do you grow teams? Like, how do you organize stuff? Like work in progress? Like, how do you minimize that? How do you get shit done like quickly? What are the feedback loops? Like, how do you learn fast from customers? Like all these things, like I wouldn't say it's like super mathematical, but like I still have like a sort of a quantitative approach to it. And I think it's actually quite helpful.
Right. You're really looking at, again, what you said, the systems, inputs, outputs.
Yeah, exactly. And that's like some of the things you study as physics. Like, it's like a control theory is like a good thing. Sometimes it's like a black box. And you're just trying to understand, like, why does this end up having like weird oscillations? And like, you kind of figure out, okay, we need to dampen it. Like, there's all this like interesting stuff in physics that I think help you a little bit with like these complex systems.
Right. Because is it because it's mainly error detection, then creating environments, simulating, running experiments to figure out, or just theorizing what actually happened given these changes?
Yeah, I think that's a good point. Like this sort of hypothesis, formulate a hypothesis, test the hypothesis. I think another thing that's like kind of valuable in physics is also that like to some extent, like you kind of realize like when you study physics, like everything is just the model. Like there's no like like reality in a way like doesn't really exist. Like because like first you learn like Newtonian physics, and then you like study like relativity theory, and you're like, actually like all these things like they don't matter at like high speeds. And then you learn like quantum mechanics, and you're like, actually they don't matter at like low scale either. So like one thing I kind of appreciate with physics is like it teaches this sort of idea that like you can have like very valuable like abstractions and approximations, but like, for different parts of the reality, you still have to apply like other models
Right.
to have more accurate predictions. So
Right.
I don't know. I think it's like stuff like that.
Yeah. It depends. Like, I'm guessing this is maybe a horrible comparison. But like the Paul Graham founder mode essay that went really viral on Brian Chesky, sort of zooming in really to the finite details of the business and being able to zoom out. I guess maybe with those two theory, with your understanding of physics, maybe that's something that you're able to do really easily as well.
Well, here's a mathematical theory I have about that. It's like it's a lot about random sampling. Like, how do you keep an organization of thousands of people accountable?
Yeah.
Like, there's no way. Like, you can't do that. Like with every single thing.
Right.
But what you can do is like you can actually pick kind of like random things and look at them and see if they're good or not. And actually, like from like a game theoretical point of view, like I think you're like that's less good. Like you get pretty close to be able to like hold everything accountable to the same bar.
So what does that look like? Does that look like you going into a random team meeting every week or every other week or every month? What does that look like systematically?
Yeah, sometimes I just like look at like random code reviews and just like take a look, and like drop some feedback. And by the way, like I'm like a super curious person, and often like the feedback I drop is like, this is great. So like I don't think it's like necessarily like this like random sampling. It's not necessarily like I drop in and like this sucks, make it better.
Change everything.
Like no, it's like it's more about like just like making people feel like they're seen and making people feel like they're actually like recognized for the valuable work. So it cuts both ways. Like sometimes I drop in and say, actually, like I don't know about this. Like maybe we should do it the other way. But I think it's also about like recognizing people's good work. So it goes both ways.
It's kind of like you're keeping a pulse on the company by checking in and doing this random sampling.
Yeah, and I'm kind of a naturally very curious person. So like I always like go around like ask people a million questions. I think it's like a flaw in this is like if you have like a biased random sampling. If people know you're always going to go and ask questions about certain projects, so you have to make sure as a founder, it's like genuine like true randomness, like which I like. It's harder because like I sometimes bias like towards certain things that I know better.
I'm curious on that aspect, like. I'm a big fan of the Founders podcast with David Senra, and I think it's so interesting to see like there's so many different ways to win, but there's only like a couple of ways for individual founders to win. I'm curious as you've gone, we're building the company, and even before then, being CTO and running different sized teams. Have you noticed that you specifically need certain structures, or because you're so curious, maybe you need to put systems in place to allow that to happen to succeed as a founder? Or it's a big, very wide-ranging question, but I'm kind of interested, like, how do you match your own personality to the success of the company in the way you operate?
First of all, I don't think there's a way to win. I think there's like 2,000 ways to not win.
Okay. Charlie Munger, show me where I'm gonna die.
Yeah, exactly. Or like I was actually thinking about Dostoevsky or whatever it is, or Tolstoy. Sorry, it's like every happy family is like happy in the in the same way. Every unhappy family, they're all like unhappy in different ways. Maybe it's the other way around. To me, like a lot of like what makes you successful is like avoiding like 5,000 mistakes, or by the way, like not even just avoiding. It's like at least like when you make those mistakes, like recognizing them pretty quickly. So I'm always like nervous about like silver bullets, but like I don't know, like a lot of it comes down to like hire smart people, give them a lot of freedom, like find things in the market that there's demand for. Listen to your customers, but don't listen too much because sometimes they give you like weird advice. Iterate very quickly, get stuff in front of customers like very fast, or get stuff out in production very fast. Build a culture where like people can like iterate and learn very quickly. There's a lot of those like sort of basics. I think it's like quite important, and even there, I think a lot of people screw it up.
Just because they're basic doesn't mean people follow them. Yeah. I think I heard you say even on the customer thing, like listen to their pain points, but don't necessarily listen to their solutions. I thought that was interesting.
I don't know. It's like this like MBA way of building companies that I think is like very bad, which is like you go out and interview like 500 people and you listen to what they want, and then you build that company. And that's like very rarely something like people want. take their pain seriously, but don't build what they're asking for. Like that's something I've like been kind of adamant about, is like people have all these like random ideas of like what they want, but often that's like not exactly what they need. And you just have to, and that's, of course, like that's the job of a startup, is to like come up with a product. Like if the problem was like easy to identify, like there would already be a solution. So it's like sort of almost like by construction, the whole point of a startup is like come up with a solution that people didn't really think of, and then put it in front of customers.
Yeah. How did you go about that? We're going to skip forward. We're going to go back to KTH and Spotify as well.
Yeah.
But how did you go about that in the early days? Because I've heard you say like this was a product you wish you had. I imagine, and this might be naive, it's such a hard product to iterate on quickly. Tell me if that's wrong, to get that customer feedback. Did you just have such conviction yourself in the problem, or what were those early days like of starting Modal?
Like I think there's like the sort of stereotypical like YC company is like you apply for something, and then by the time you're in YC, you already pivoted 5 times. And by the time you take money, you pivoted another 9 times. And it's like you try things, like kind of throw spaghetti at the wall. And it's like, no disrespect, like just an enormous amount of like very successful companies that come out of YC that are very, successful. And but like cliche of just like iterating and trying different things. I think when you're building infrastructure, like infrastructure is hard to build. The most extreme example would be like building a database. If you build a database, you kind of need to sit down for 2 years and just like make the database work. If it doesn't work, like what are you even trying? You can't refute, a hypothesis fully unless you actually like in a way like build the MVP. And so I think with infrastructure, like, you need to sit down for 2 years and just like build it. The nice thing is like when you emerge out of the cave, hopefully if the thing works, which is a big if, it may still not work. But if it works, like you have a little bit of a moat because, you invested a lot of technology into this thing. So yeah, so like I had the confidence of what we're working on. This is also during the ZERP era, so it's like kind of exuberant in many ways.
Although you guys didn't raise a crazy round, like
no, we didn't. But like I don't know, it was like kind of happy days. Like the stock market was like going bananas. Yeah. It was during the pandemic, So I think that helped me a little bit with confidence. But like yeah, so like we sat down for like a couple of years and just had a lot of conviction in like what we're building will solve a bunch of problems. Which problems? Like we don't know. but like we felt like there's something here. There's clearly something here. Like this will be valuable somehow. And then it turned out like it was, maybe that was lucky. I don't know. But, I think it's just a different way of building a product.
Yeah. Yeah. Well, to your point, you probably have to do that with hardware because there is just such upfront investment.
Yeah. I mean, we're not hard, but like infrastructure, right? Like anything that's like, harder, right? Like that's not like, I mean, consumer companies, I think it's a little bit different in many cases. Although Spotify was actually quite similar to Modal, like in the sense that Spotify took several years.
Is that just because the way, because early days Spotify, like you had to do the peer-to-peer sharing mixed with like there was some innovations there. Is that why? Or
there's a lot of that too. Yeah.
Yeah. Okay. All right. Well, let's go back to Spotify then. The Biography podcast is presented by Ro, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Ro. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cash back, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Ro is their team. They are obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Biography podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company's cash with Ro. To learn more, visit rho.co/biography. Terms and conditions apply. Ro is a fintech, not a bank. Checking and card services are provided by Webster Bank, member FDIC. See rewards terms for details. Because you're a graduate in Sweden. Why join Spotify? Because I think you've said you've joined as the 40th employee. Was it clear? Like, was it clear then already that this would, I don't know. Like, you probably had a ton of opportunity. Why join that company? Obviously, a great bet.
Yeah, I know it worked out. So maybe let's kind of rewind. Year is what, like 2008 or something like that. So I did a lot of programming competitions, and then when I joined KTH, there was a bunch of people that were a little bit older than me that were also doing a lot of programming competitions. So I got to know them. They're really cool. And at the same time, I was also working on with a friend this like book recommendation system. Like we built this like website for book recommendations in Sweden. It's kind of a side project, but arguably it was like my first startup. Like we never raised money or anything, but like we generated some users. Yeah, we had like a few $1,000s in revenue every month, which is like it's fine. When you're like 20 something, still in school. Anyway, so I got in touch with the Spotify people who all these like programming competition crew. They a lot of them ended up joining Spotify, and then they were like, "Well, Erik is like building recommendations. Like maybe we should hire him too." So I ended up meeting the then CTO and for coffee, and he was like, "Yeah, like maybe you should join Spotify, like and build recommendations because we're gonna need that." And I was like, "Hell yeah, that sounds awesome. Can I do my master's thesis at Spotify?" Because I was looking for a master's thesis topic. So I joined Spotify as like kind of an intern. It was like kind of unpaid, I think, from what I remember. Actually, maybe I was paid, but it wasn't like a full time job exactly because I was still in school. But I spent 6 months like basically with Spotify building a music recommendation system. And then they hired me early 2009 to do music recommendation. Immediately, basically turned out like they had too many other things I needed to do. So like I got pulled in. They're basically like, okay, stop working with the music recommendation system for now. We need someone to do business intelligence.
Right.
So then I ended up doing like reporting, business intelligence for a couple of years, which actually was like super valuable later in my life because I learned a lot about like how to think about a business, like how to make. I was making a lot of like board decks. My first job, like pulling data, like understanding customer retention, customer behavior, like things like that. So I ended up doing that for a couple of years while actually working on the music recommendation system in the background, complete like skunk works. Like I didn't tell people. I just kept working on it. So I was like, obviously this will be valuable one day, but no one told me to work on it. So that was my first few years at Spotify.
I think it's insanely underrated how hard it was for you guys to crack the algorithms and like how early you guys were doing machine learning even at Spotify. What was unexpected? Because it sounds like a downgrade. Doing these reports and working on less. What were some unexpected lessons from that? Like, is it just like you said, just seeing how the business operated and getting a more holistic view of that?
The chief product officer, the CEO, like they would come to me and like I was this like random new grad and they're like, you got to get me this data like now, like we have a board meeting tomorrow. So like, I don't know, I like that sort of excitement and the sort of influence that I had. And it was like fine, but like, from a theoretical perspective, it's probably not that interesting. It was like not like hard math or anything, but like, I don't know, like I gained like a lot of appreciation for like how to pull data that sort of helps you answer questions about the business, which I find like super fascinating. Like I'm happy also not doing advanced math. Like if at the end of the day, I think one thing I learned a lot about Spotify is like at the end of the day, like I'm just excited about building a great product, and Spotify at that time, Spotify is weird because there's always product market fit. It was very unclear if there was a business model. Business model fit was unclear. Like, will we get label contracts and all these things? But it was very clear when we put it in front of customers, like people loved the product. And I think that was like really, it was just amazing to work at that company at that time because all my friends were using it, like all my family, like I don't know, it was fun to have impact at such a level, and build a consumer product at that scale. So that was like ultimately like also really exciting.
Yeah, 100%. Yeah, it's a great. I mean, it's one of the best European companies, one of the few actual European tech companies. Um,
Yeah.
and you're right. Like the more you play, the more you pay principle and all these things that you had to do a lot of business model innovation as well. I'm curious. Then what made you want to like at the end of your tenure at Spotify? You were there for a while. Like you saw the company I think grow probably from 40 to like several hundred plus, maybe probably 1,000 plus
2000,
people. That's
2000 when
insane.
I left.
That's
Yeah.
insane. Walk me through then, the end of your tenure there. Like, what made you think, okay, now it's time to move on? And
So I ended up spending a couple of years like doing this like reporting stuff, and then I actually quit Spotify because I wanted to. Because I got offered a job at a hedge fund in New York, and I had a summer internship in New York. I really liked the city. I was really excited about maybe like go back and do some like hardcore math, make a bunch of money. So I moved to New York, and this is early 2011, and took a job here. The job was fine. I didn't love it. Like basically, like I just like missed Spotify a lot. And so just like 5 or 6 months in, Spotify opened an office in New York, and they basically reached out. They're like, "We need people here in New York. Erik, you're in New York. Do you want to come back?" And I was like, "Hell yeah!"
perfect
Like,
timing.
no, it was because like I realized like finance is not for me. Like I just like lacked, the sort of meaningfulness of building a consumer product. So I came back to Spotify late 2011. And then at that time, they were like, yeah, Erik, we got to do music recommendations. Bring back your system. And I was like, great. Like, I have this system I've been working on, so let's plug it in. And it actually worked pretty well. So I ended up spending another 3-4 years almost in New York at Spotify, focused mainly on music recommendation systems. We built a whole team of about 20-25 people. In the end, there was like, Spotify got very big, got very messy. Like, I'm kind of person, I kind of want to just like build like cool systems and optimize stuff. But Spotify made this acquisition, and it was kind of just a lot of stakeholders, and in the end, I was kind of burnt out. So I left Spotify in early 2015 and joined this fintech startup, which was 10 people back then, called Better, as a CTO.
You mentioned Bernard. That sounds like a pretty intense experience as well.
Yeah, it was a weird experience.
Why?
Ultimately, extremely educational. So Better was like a weird company. I mean, it was like fintech, and I think like me and the CEO got along really well. Like, but he's nuts, like in a good way. Like he wants to change the world. Very smart, super mathematical. I mean, in my 5 years there, we grew the company from 10 people to 10,000 people. I grew the tech team to 400 people. I mean, in the last year I left there, the company made, $250 million in profit, which was like the 5th year of the company. So some stuff was going really, really well. However, a lot of that growth ended up, what we realized, was like fueled by low interest rates. And so when interest rates went up at the end of the pandemic, during the pandemic, company kind of imploded. And at that time, it was like we were supposed to go public, and they had to have like big layoffs. I mean, there was like a famous clip that leaked, and suddenly the company went from like glory to like, it was like suddenly this like disgraceful company. I at that time had already left. But I mean, I don't know. It was like crazy ride, like going from 10 people to 10,000 people in like 5 years.
Yeah.
So I owe a lot to at least like learning about how to build organizations, how to hire, how to structure things, how to not get ahead of yourself in terms of revenue and growth, because we did overhire a little bit. The company eventually ended up going public in 2 years later in 2023, but like at a small fraction of its original value. So it was a wild ride. Yeah.
What did you take away from that? Because I imagine you're then 2 years building this infrastructure, this new company. I feel like you said you overhired, right? Like that seems like it'd be really hard to judge in the moment. I'm curious,
it's very hard, yeah.
What models you do have, because you guys are growing really fast right now as well. And I know you've talked about like these AI companies, like initially weren't maybe the exact target company or customer, but they've just such a perfect customer for the solution you guys had. I think it was Midjourney that was sort of an inflection point for you guys.
No, Midjourney.
Stable Diffusion. Stable Diffusion. That was
Stable Diffusion.
Yes.
As a model
when it came out.
Being,
yeah.
So maybe just to
backtrack.
Keep it in order. So I left Better. This was during the pandemic. I kind of, at that time, I'd also just had like 2 kids. I was again like a little bit burnt out. Like basically took like half a year off. And started like hacking on various ideas. And Modal is like actually my like 3rd idea. I had a few different ideas before, but in general, like I just kept coming back to like, it's hard to build AI machine learning products, data products. And so I started hacking on something and that I got like super excited about. And by the way, like maybe this was like why I ended up with Modal. So the story is roughly, when I was at Spotify, I open sourced a couple of things.
Yes.
One thing was like a workflow scheduler called Luigi.
Yeah.
Which was like moderately successful at that time. Another thing was a vector database, actually, that Twitter and a bunch of Instacart and a bunch of other ones ended up using, called Annoy. But anyway, so I came back to sort of Luigi in 2021. I'm like, I should have maybe started a company around that. And then like I started playing around with the idea, but I realized it's kind of hard to do a workflow scheduler company. Because it's hard to make money unless you own the execution layer below. And I was like, why don't I just focus on that instead, actually? So I kind of paused this whole work on workflow schedule. And then I was like, why don't I just build an execution layer for like arbitrary workloads targeted towards like data, AI, machine learning? And that was like my third idea, like kind of like startup idea. I wasn't really sure if I wanted to start a company, but I was just like kind of hacking on stuff. And suddenly I was like obsessed with it. Like I was spending like all my time like just writing code and just like building shit, which was kind of fun because like I went from like managing 400 people back to just like writing code myself all the time. So started hacking on it in 2021. Actually, I joined as a co-founder. We formally incorporated in June 2021. Raised a little bit of money early 2022. And again, this was during the ZERP era. Like there was like kind of take some money. I was like, sure, great. But we didn't grow like super fast because we felt like there was like so much like foundational technology we had to build. We pretty quickly built our own file system, built our container runtime, like all these like deep like technology. Um, then in like late 2022, just like almost like 2 years in at this point, we barely had like any revenue. We had like almost like no customers. Like the customers we had basically begged to like use Modal, and they were like friends.
How much had you burned up until that point?
We never burned that much capital because
Okay,
we were like
okay.
kind of small.
All right.
I mean,
That's at
also
least
like
nice.
initially, like I self-funded Modal. Like I was like, I invested my own money into Modal.
Right.
And so like initially I was like very like lean. I'm like, this is my money. Like, then we took external capital at some point. So we were only like 4 or 5 people, even like 2 years in, maybe 6 people. But yeah, anyway, Stable Diffusion came out that year. And or around that time. So ChatGPT and Stable Diffusion actually both came out like I think October, November, something like that, September maybe 2022. 2022, I believe. Yeah, a lot of people just started coming to us and they were like, yeah, actually, can we run this on Modal? And it turned out we were like quite well positioned to support a lot of those workloads. So that's when we went from like monthly revenue went from like 100 to 1,000 to like 10,000 in like a few months to like 100,000 almost. Not quite, but like something like that. It went like nuts. Like over like it was like end of 2022, early 2023, and we felt like we might have something here. But I was still like kind of nervous about it. But it felt like we had something.
Why were you nervous? Was it because you just come from this experience of growing really fast or
I think so. And there was like one big customer that came in like early 2023. I was so paranoid. Like I remember like when they put all their like load on Modal, like I set my like alarm at like 3 a.m. in the middle of the night because I just wanted to go up and make sure like everything was like running well. I didn't need the alarm because I woke up anyway. And like I just like woke up and just like checked my computer, like, oh, okay, things are
it's
still
working?
running.
Yeah.
And then I woke up again at like 5 a.m. Like, okay, things are still running. Like I just so I was like, I remember that, but I was still nervous because there was just like one customer. So then like I think like March or April, there was like another big customer that came in. And then like May, there was like maybe a third customer. Suddenly we had like a little bit more like revenue diversification. Like we had like 3 kind of big customers. I mean, big, but for us, they were big, right? We crossed like 1 million annualized around that time. And at that time, I felt like, okay, maybe we actually have product market fit.
Walk me through that moment where you're like, okay, maybe we have product market fit now. What did you think were the most important next steps? Was it literally just building out the capacity to serve more of the customers? Was it building out a go-to-market team? Or what did you, I imagine there must have been like 100 things you could have done at that point.
I came from a consumer background. So I came from Spotify and then Better, which were both like just like mega consumer focused. So like, I don't think I thought about like PLG per se, but like basically that was all I knew. Like I didn't even think about enterprise sales. I had zero background in enterprise sales, which is like maybe a weakness. Like I've had to learn a lot about it. And so initially, like a lot of how we built Modal was like, we had like an amazing onboarding experience. We made it super easy to get started, write your first code, like almost like to the point where like, it's like frivolous. Like you sign up for Modal, there's like confetti flying or whatever. There's like small things like that. Like I spent a lot of time like making sure that like that experience was like magic. Cause I always felt like the setup experience is like, that's like the first time you see the product. You want that especially to be super good. So a lot of our growth in the early days, it was purely inbound. Like we had the marketing channels was like me posting shit on Twitter, like, cause I had a decent following. I'd been blogging for a long time. And so that was like our distribution channel. It was just like me talking about building Modal and like the stuff we're launching. I think in terms of like what we're focused on the technology side, like we felt like we had product market fit in one area, which is like serving these like stable diffusion like models. We weren't necessarily sure how big that market was, but we're like, okay, let's like at least like trying to go out and get more customers. And also initially I would say at that time, there was a lot of like kind of bootstrapped companies. And nothing wrong about that, but like I think a challenge was like we would see some of those companies kind of go mega viral and then like next month just die.
So they couldn't
So
support
we
the
had a little bit
growth?
of, yeah. So like we were indexed to all these companies that would like, kind of just like boom and bust. So I think we started at that point to focus a little bit more on saying like we want like venture funded startups as customers, and part of that reasoning was just like those customers are probably building something slightly more durable and they have a little bit higher margins, so they're better customers. So I think we launched, that was like maybe our first like growth hack is I think like towards the mid to end of 2023, we launched like a startup program, like basically like the idea, like we can give a bunch of credits to people. It's very crude. It's basically like, are you a startup? Okay, here's like $10,000 in Modal credits. But that was like, I think our first sort of like growth thing that started working. And then I think we hired our first salesperson in 2024, but even after that, like we still couldn't really figure out like how do we get in front of customers, because we sort of captured like a smaller, narrower market. We were competing with neo clouds. We were not like super indexed towards like LLMs, and open source LLMs were not like a super big thing at that time. So I think like getting to enterprise sales, it wasn't until like I would say like last year, 2025, where that kind of figured out like what like enterprise sales.
That sounds insane, given the adoption and the growth you guys have had.
I mean, still like almost all our growth is inbound.
Really?
Yeah, I mean, like it's a good problem to have, but like our sales team is like so overwhelmed with all the inbound stuff, like just like getting that done.
That's great. Is that because of that consumer mindset? We think you've built such a wonderful experience, and the product is
I think
just
so.
yeah.
I think so. And it's something I took away from Spotify in a way. Like Spotify had this like magic onboarding experience where like, you try it out the first time, you double click, a song, and it just like works, and it's like in the cloud. And like there's like something similar about Modal. Like you run some code and it's in the cloud, and like just works. It's magic.
Founder of Assembly AI, and I was blown away by how thoughtful they are about building quality, scalable products. I'm using Assembly AI myself, including to transcribe this podcast. Their speech-to-text models are just insanely accurate. Their models go way beyond transcription. I mean, you can identify speakers, highlight key moments, and extract actionable insights from every conversation you have. Now, the cool thing about it is that it's developer-friendly, and it's built to scale. So it's flexible, it has pay-as-you-go pricing, and I've seen it firsthand. Assembly AI even transcribed my previous podcasts flawlessly with one click. Now, Dylan wanted my listeners to get some perks, so they've doubled the free credits, giving you $100 to try their models. It's a great way to test out the models for transcription, speaker diarization, and more. So stop what you're doing and go to assemblyai.com/biography to see this episode's podcast transcribed and to claim your free API credits.
And so I think nailing that, and then like the other part of it was like just like talking about the product and having a distribution. And I think in the early days, I call it like founder-led marketing. Like I think that was just like a distribution channel that like for me felt very natural, because I always been a big blogger and tweeter. So I think those two things like kind of put together for us was like kind of led to pretty strong like PLG, product-led growth in the early days.
Is there anything you would do differently? Looking back, more emphasis perhaps on your own brand and getting customers through your tweets or content, or hiring a salesperson earlier?
I think we should have invested in sales earlier. I think I held back on sales, waiting until we had like signal that it was working. I think we should have just assumed that eventually it's going to work. So let's just like hire a bunch of people. We waited like we went like going from one salesperson to like our second salesperson. That took like a year, maybe more, something like that. So I think in hindsight, I wish I'd hired maybe like 2 to 3 salespeople like from day one. Even though it was like, I don't know if this is gonna work. Like I feel like I should have just done it. Like I don't know. It's like one of those things where like in the hindsight, I wasn't quite as aggressive as I should have been.
Yeah, what sort of signal could you have used at that time that would have made it obvious that you should have taken that risk or that bet to hire more salespeople?
I don't think it was actually a signal that we should have looked at. I think it should just be like, assuming things work out, what are we going to need in a year? And just like hire those people.
I think a lot of startups don't assume. I don't know. Maybe that's wrong. Like think that far ahead. It's like things are gonna work
Yeah,
out.
I mean, if anything, I think they assume everything is going to work and they overhire. They hire like, because I think that's like you can go in the other, that's the error of the commission, right? Like, some companies, they're like, yeah, we're going to need a chief of staff. We're going to need a COO. We're going to need a CFO. I always think it's like ridiculous when you like see these like, small, tiny companies that barely have revenue and they have like a CFO or something like that.
What
Like,
is he
what are you
managing?
doing? What are you managing? There's no finance here. Like, you're not making money, or like a CRO with no revenue. Like,
What are you optimizing?
so I think, I sometimes like, I struggle with that, but I think I should have, in hindsight, been a little bit more towards that,
Right.
because I was like too lean. I was like too, like, I held back a little bit.
How are you investing today then with the same sort of idea where you're, maybe being a bit more aggressive with how things are going in the future?
I'm trying to be a little bit better in terms of just like thinking, what are we going to need, assuming things work out? Like, we're probably going to need a CFO. Let's start looking for one already. We're probably going to need, you know, HR, legal. Like, we haven't had a lot of these functions. We don't have a product team still. I mean, the work structure at Modal is very basic. Like, there's a lot of engineers, and then there's like sales. That's it. I mean, there's like some smaller stuff. There's a little bit of marketing and design and stuff like that. But like, in a way, it's like kind of simple and clean, and it's like nice because like it means like things, I don't have to think about 5 things, but like, yeah, I mean, over time we're gonna need a lot more. We we don't have an HR team, we don't have a product team, we don't have legal or finance. So those are 4 functions like we should probably hire.
That's insane. That's crazy. That I mean, I guess it goes to show like if you just build things people want and try and get it in front of them, that's really all that matters. How you're thinking about these new functions and adding that to the team without because complexity is going to go up. But I want to. I'm sure you're being careful about making sure that doesn't come at the cost at an extreme end of productivity and making sure the organization moves fast. I'm curious how you're thinking about doing that, and especially because you've already been part of organizations that have grown really fast. So I'm sure you've seen like warning signs or things that didn't work or did work. Um, how are you thinking about making sure the company stays efficient when it grows?
You don't have to necessarily think too much about it. I think up to like 30, 40, 50, 60 people, people are like pretty good at like kind of understanding at a high level what the company needs to do. I think as a culture, we've always been pretty good at like letting people just make their own decisions, and, you know, like, what do you think is best for the organization? Just do it. Like, I want to have this like mindset where people just come in every morning and there's like, what can I do for the company? And just like do that, right? A very high degree of self-organization. I think what ends up happening when you're like 40, 50 people roughly is like, maybe a little bit earlier actually, there's like too much stuff going on. So you need to like assign a little bit more, like sort of split things up, and assign like sort of ownership over things. That's when it gets like kind of complex, because, and there's no good way to do this, right? Like, there's so many different ways you can distribute teams. My general feeling is like, first of all, you should try to co-locate teams as much as possible, like geographically, right? Like, we have multiple offices. So that's like one heuristic. I think the other thing is like, as much as possible, you want teams that own like business outcomes. Like, basically, like, there are like high level like business goals that they can own. Like, ideally, they should have like a P&L, like a profit and loss associated with each team.
Everyone in the company.
I mean, like, no, I'm just saying, like, you're optimizing for a lot of different things. You're not going to get all of it, but
Yeah.
like, it's nice. No, I'm saying it on a team level. I don't think on an
Okay.
individual level. That's maybe my Scandinavian thing, but like, I don't think individuals should have, too much. Like, it should be, everything should be on a team level.
Yeah.
However, that's also not realistic. Some people are going to have to own more like platformy functions, right? So like, I think eventually, like, what you end up happening is like, basically you end up having 2 types of teams. Some are like business verticals, and they own like a feature area or like a product area. And ideally, you have like very clear metrics or KPIs that say like, these are the things we care the most about. Or you have like more of a platform team, and they kind of serve like everyone, and they build just like internal tools for everyone else to use. But that transformation is tricky, and I think it happens around, especially as you go from like 50 people to like maybe 150. Like, you're gonna have to like constantly like sort of restructure your teams to like figure that out. So that's a little bit of a thing I think right now where we're thinking a lot about, like, how do I set the organization up for success in that sense?
Are you breaking down the entire structure each time and reassigning people?
No, that's impossible. You have to start with the existing teams. You can't move around people like all the time.
Yeah.
I think you have to like kind of organically, like, take a team, split it, and then like take two teams, merge it. I mean, you're definitely going to split more than you merge,
Right.
but I think that's like, or like reassign projects from like one team to another, or like move people between teams. Like
Right.
there are like a few different like actions here, right? And you just have to like constantly like rebalance things over time. There's also a technical component, of course, in engineering, where like ideally you also want teams to align with like technical like service boundaries or like code
Mhm.
based boundaries. And I think that's also like something that starts to happen around 30, 40, 50 people is like you have this like tragedy of the commons type problem. Like who is in charge of CI, continuous integration? Like who's make sure it's like the tests aren't flaky, like things like that. And so that's when you start to factor out these like first, like I think like more like platformy teams.
Right. Where they own these
Um,
things that people care about, but not really because it's not their direct.
Yeah, exactly. And then like the people that are like not in those platform teams, ideally they should have like clear sort of boundaries in terms of you own this code base, you own this code base, you own this. These are your business outcomes. But at the end of the day, like you can't check all the different boxes. So I think it's like, you know, you have to be like sort of pragmatic and try to do as well as you get, as good as it gets.
Yeah. You mentioned co-locating. Is that something that you're doing? I mean, is everyone of those first 30 people in one office, and then as you grow, you also then function wise pulling people into the same spots and only putting them on projects or even code bases that are related to that specific product?
We're like 4 or 5 people. We hired a person in Sweden. So then we had like one remote person. But over time, like we ended up like hiring some more people in Sweden. So then we had an office in Stockholm that was like kind of small, but like most of the people were in New York. And then at some point we ended up hiring people in San Francisco. So now we have 3 offices, right? We're about 60 people in New York. We're about 10 each in San Francisco and Stockholm. Yeah, I mean it's tricky to split things up, but like we're right now like moving things around. Like for instance, like our sandbox product, which is going quite well. We're like in the midst of like moving a lot of that to Stockholm, and the idea being like, okay, like Stockholm, they're a separate team, they're a satellite office, but if they can own that like from a business perspective, including like maybe even like marketing and sales, documentation, like everything related to sandboxes, then they kind of have their own product that they can be like fully responsible for. But that's been a long way to get there. But like that's like a kind of a shift we're now going through. And it's similar in San Francisco. Like most of the team in San Francisco, what they own is like all the LLM stuff. Because that's like it's not quite a product, but like it's like a very clear focus. Like go win these deals, go work with these customers, do what it takes to make Modal really good at LLM inference.
Right, which involves, as you just mentioned as well, like the product, actually building the product, selling the product, talking to customers.
Exactly. Yeah. Exactly. Yeah. So they're very like sales driven, even though they're all engineers. Although we have some salespeople too.
Maybe not enough to our earlier at this point.
No, I mean I think you should have like engineers involved in a lot of sales in the early days.
Yeah,
At a tech
especially
company, like
especially for what you guys are selling. I am
absolutely.
yeah.
Yeah, especially since our buyers, they're all engineers and they want to talk to engineers ideally.
You can't bullshit them.
Yeah, it's hard.
I want to talk a little bit about fundraising in general and building the team structure, and then as well as like location Europe, Sweden. Does that change how you've hired for salespeople? Like just the complexity of the product.
Initially, I was like kind of adamant. I'm like, we need like super technical salespeople. I've actually changed a little bit on that. Like, cause I feel like what I've observed in sales teams is that even if, even though we have like such a technical uh, product, like the salespeople that are like doing well don't necessarily have always a technical background. As long as they've done technical sales, more important is like high energy. It's loving to talk to customers. Like I've actually realized like they may not actually need to be super technical, though. As long as you bring also someone else into the meeting. So you can have a salesperson who's like maybe not the most technical person. They're just like high energy, like want to unblock, want to figure out like organizationally, how do we get into this account? And then you kind of pair them with like some sort of solutions architect or forward deployed engineer or just an engineer. And that model actually works quite well. So we've hired pretty successfully from like companies who have a long history of like technical sales, like companies like Databricks or similar ones, like they have, really strong sales culture, even though like the sellers are not necessarily like technical themselves.
Interesting. Right. Because they've had the experience of bringing, to your point, like their whole job is just to unblock internally and also within the client's account. How do you make that
Yeah,
deal happen?
exactly. Because that's a lot of what it comes down to. Is like really like understanding the organization, who's making the decisions, like what are the biggest concerns, how do we put together a proposal, how hard do we need to negotiate, like all these things, right?
Interesting. On the Databricks thing, I don't want to pick on them, but like they're a great product, a great company. I've heard people say you should only hire salespeople from like, I don't want to say bad companies, but like companies with hard products to sell, or perhaps not a great product market fit. What are your thoughts on hiring specifically salespeople from those yeah, just good companies versus bad companies?
I think you learn a lot more from success
Okay.
I, than failure. I think most learning is like unsupervised in the sense that like you don't necessarily learn from your own behavior what's successful or not. So a lot of learning is just like doing what you did at your previous company. And if you come from a successful company, most of more likely the things you did at the previous company were good. Like, and this goes for like engineers too. Like I think very, very few learnings are actually like learning things by like failing or succeeding yourself. It's more like just like observing what other people do and just like replicating that. And I think like successful companies on average have more successful things going on. And so I don't know. I don't really necessarily buy like learning from failure. I think you learn way more from success.
And you're not even yourself putting attention to what it is, the one thing, because it's just so many factors that are
Yeah,
influencing.
exactly. But you do it again because that's all you know.
Yeah.
But like more likely that thing is actually a good thing because you worked at a successful company that did many successful things.
Switching it up a little bit, I want to talk about fundraising. This episode is brought to you by Beehive, the publishing platform built for modern newsletter businesses. If you want to start, grow, or monetize a newsletter, Beehive gives you everything in one place. Powerful writing tools, deep analytics, a referral program, and built-in ad network and sponsorship opportunities. I've actually had Tyler on the podcast, the founder of Beehive. And when you look at how he thinks about building a company, it's very clear why some of the fastest growing media companies and creators are turning to Beehive to run their newsletters and run their businesses. So if you've ever thought about starting a newsletter or want to take yours seriously, check out Beehive below. You can also go to mine in the description. In general, and why you should or shouldn't do it. I know we just talked about how you took a couple of years to really build the product out. You funded the company yourself for a while, especially with how much hype there is around companies now. I'm curious, like what your general advice tends to be to founders. I'm sure you talk to a bunch of founders, and they come up to you asking for questions and advice. In what sort of situations do you advise folks to go for it, to be more aggressive, or maybe to hold off on the funding?
VC funding isn't for every company. Like VC funding is for companies that, want to hyperscale and has a business model where like hyperscaling makes sense. You know, if you're what's his name, Peter Levels, like, like
Yeah,
I think all these businesses are like
great.
extremely bootstrap friendly, right? Like
Yeah.
works great for him. Like there's no need for him to take a lot of venture capital and like scale the shit out of it. For us, it does make a lot of sense because we see a very large market, right? And that's part of like Modal's potential has always been there's such an enormous market for like infrastructure for like AI, data, machine learning products, right? So for us, it was like very clear we should take money and we should grow, and let's not try to be profitable. Let's like instead focus on growth. Like this is a company that can be enormously profitable at very large scale. Like we don't need to be profitable today. So it's a very clear sort of like VC fundable business model. Then it comes down to, okay, like how do you think about like growing? Like I always like tell people like don't take too much money. Like there's like so many VCs out there that are like VCs generally are very smart and very friendly and they want to help you. But you should remember that first of all, it's your company. You're gonna have to build it yourself. Like VCs can help you a little bit, but like at the end of the day, like you're gonna have to build it yourself. And like you shouldn't count on VCs. You should never bank on VCs to be like massively helpful. It's at least we have very helpful VCs we work with, but like at the end of the day, it's not their job to make the company successful. It's your job. The other thing is like VCs have like a little bit of a misalignment when it comes down to actually like putting in money. They will generally always want you to take more money than you need because they want to higher ownership and they get carried on the money they deploy. And so I always think it's important to hold back as much as you can and not give up dilution and not take. And the other reason why I think that's important is, not just to minimize dilution, but also I think otherwise you create like a very high watermark sometimes, like because the more money you take, often the valuation goes up, which like some founders like. I think it can be dangerous if you're like raising at like way ahead of where you are in terms of revenue and traction. If you're like a company without revenue and you're raising at $100 million valuation, now like investors are gonna expect you to get to like a few $1 million in revenue pretty soon, within 12 months.
You might make it rational, or rational in that sense, I guess, but perhaps
Yeah,
not.
and like if you're raising $100 million valuation, what's the next round gonna be? Then the next round has to be at like 200, $300 million valuation. How much revenue do you have to get to that? I mean, probably like 10 million. So like now you set a very high, very aggressive goal for yourself. And so I think so. I see a lot of founders who raise too much money, raise it at a high valuation. I think it's better sometimes to like hold back, raise smaller money at a lower valuation. That also helps you with taxes, by the way, so you can like keep the 409A low. This is more a US thing. But you can issue options at a lower strike price. You can do all these things. But if you're employees, yeah, exactly. So at least like smart employees understand this argument. I'm not like a super aggressive person. That being said, like, I mean, I think like aggression is sometimes like not something you can choose. If you're in a hot market, if there are competitors raising mega rounds, you may have to do it yourself too. But in the early days, when it's more like category creation, you're just trying to figure out, building a dream. I don't necessarily like think it makes sense to raise like $1 billion like some
Right.
companies. Like
Right.
start smaller, iterate, like
give
shift.
yourself more runway to just focus on the product and not make
Yeah,
short-term decisions just to grow the company. Is that can
yeah.
you walk me through your funding rounds and why you decided to do them? Because I imagine the reason changes over time, right? Like to your earlier point, like right now the revenue growth, like that's really important. In the early days, it was just, can we build this product? Do people want it? We think they want it, but just, can we build the product?
Like every funding round we made to some extent has been just driven by we should grow faster and we need money for it.
Mhm.
Including the first one we did, which is 2022. At that point, I was still self-funding the company. That was not sustainable because I didn't have like that much money. So we took that money. It was a small round. I think we took like, I mean, small sevens. I think we took seven exactly. And then we did an extension a few months later at a slightly higher valuation just to bring in a bunch of angels because we saw so much interest. And then we did an A round 2023. It was a Red Point. The seed round was Amplify. The A round was Red Point. It's kind of the same story. Like we felt like, we have product market fit and we need to grow it. Like I feel like the first round is like all about team and technology. The second round, like the A round, is a little bit more about like revenue and like revenue growth. And then the B round and the C round, now you're like looking at more like, is this scalable, margins, whatever, retention, like these types of things.
It's less a vision bet, more a Excel sheet, maybe.
We're not quite there yet. Like I still think like that the investors we talk to, I mean, now we're like growth, like B or C. So it's still very much like, how large can this get? Is probably the biggest question everyone asks. But it is a little bit more like kind of looking at margins, looking at, cohort retention, NDR, net dollar retention, like all these things. Like it's more mathematical the later you get, for sure.
Right. Does that also then change who you want to take on as a VC? Because I imagine, when you're a hot company, or at least when you're a company with, the traction you have, you can be a little bit more choosy with the rounds on who you want on your table.
I think ultimately, like a lot of VC value comes from just like signaling, like, it's like
For
the
customers,
signal.
employee, or like all of that?
Well, to subsequent VCs,
Oh, okay, okay.
but also to employees and customers. And part of why we raced from Amplify was that Amplify is a company that was a seed round. Amplify is extremely focused on just like infrastructure, data, machine learning. Like they don't do consumer stuff really. They do a little bit of biology, but like we felt like they have a reputation of underwriting deals based on team and technology. And so like taking money from them, seed money, I felt like that sent a signal to the market that like Amplify invested. Okay,
It's a serious
so
product. It's a serious team.
they probably know what they're doing. There's probably some serious technology here. Check the box, technology and team. And then like, Red Point was the A round. It's kind of similar. They're like a little bit later stage, but also sort of mostly based on team and technology. And then I think, later stage investors, it's a little bit more about just like traction and vision. So you kind of want to, check the box on that. So I think a lot about like, racing from the right investors is really just like sort of brand of that investor. Is that aligned with the product? And what does that send? What's the signal that sends to the market?
The Biography podcast is presented by Ro, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Ro. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cash back, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Ro is their team. They are obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Biography podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company's cash with Ro. To learn more, visit rho.co/biography. Terms and conditions apply. Ro is a fintech, not a bank. Checking and card services are provided by Webster Bank, member FDIC. See rewards terms for details. I'm just curious, like, what advice do you have just to younger founders? You had two product failure or two sort of ventures, small like ventures before Modal, right? That didn't work out until you found this thing that you became obsessed with. What have you just found that works for you, or in finding a company that you want to run, in building a life you want to live and are excited about?
My funding story is very much like, what I talked about, like building infrastructure, like focusing on hard things with large markets, right? And spending a few years doing that. I was also an older founder. I was 36 or 37 when I started hiring, building Modal. And so I think, but again, like infrastructure is a place where like, I think experience actually matters. So I don't want to necessarily like, say this is the universal way to start a company, but I do think, within the space that I started, like doing it later in life, relatively speaking, picking a very hard technical problem, picking something with a very large market, and then like spending a number of years, building some very complex, hard stuff that you have like high confidence in. To me, that's like a formula that like I personally believe. If I created a new company today, I'd probably apply the same formula.
Why do you think that fits your personality so well? Because I know we talked about earlier, like you could be doing just theoretical physics or deep maths, sort of like I think you probably find yourself deeply interested in a lot of different things. Why has that for you been such a successful playbook outside of just the
I love solving hard problems. I love like taking a problem that like people think is really hard, and then like I kind of scratch the surface and I was like, yeah, it's kind of hard, but like not quite as hard as people think. To me, that's like really exciting. It's like, this is actually, it's something like Elon Musk maybe about that. Like, but like, obviously like he's operating at a much larger scale than I am, but like taking a hard problem and realizing this is not quite as hard as people think. And it's actually doable. Like you can actually do something in this space. To me, that's like really exciting.
That probably goes back to your physics background, just having a deep understanding of things around you, and more malleable than. There's a great book coming out soon by Erik Jorgensen, the Book of Elon, where he like details all of his lessons, like from him, taken from interviews and stuff.
Yeah,
and you probably know this, but for listeners, like Elon always talks about it. Can it be physically done? Okay, great, then we can do it.
Yeah. Yeah. No, I'm not an Elon stan, but like I do think there's like a lot of validity to that approach, right?
I can't imagine how many great founders there are there. So are there any other archetypes you look at? Like, I think I see a little bit of myself in how they approach solving problems and building a business.
Yeah, I do respect a lot the founders of like Datadog. Like I think they had a very like PLG focus. Like they wanted to solve a hard problem. They built something in New York. Over time, they like layered on enterprise sales. They were very quantitative, very sort of built things in a foundational way. Go multi-product early. Like that's a product that I admire a lot. Snowflake, I think it's like kind of a similar thing. Also European founders. Actually, both Datadog and Snowflake are French founders. Built like a hard technical problem, scaled it, like built a very successful business.
A good sales motion, I think.
Yeah. Eventually layer on like enterprise sales, right? And so I to me, like those are the types of companies that I look up to a lot.
It's interesting that those companies, like they seem like on similar. You seem like you're on a similar trajectory. At least like not exactly the same product or whatever, but like the type of company and how you're building it.
Yep.
What do you think the next year or two or a couple of years look like for you?
I think something that happened in 2025 that made me extremely bullish on Modal. I mean, I'm very biased, but like it was like massively like, for me fulfilling. It was like seeing multiple products out there that are all kind of working. And in particular, the sandbox product really took off in 2025. We got Lovable as the customer, and a few other ones, like a lot of vibe coding platforms, reinforcement learning, some other stuff. Meta started using us for that. So to me, it's like seeing that, like, we had inference as like a core sort of killer app for a long time. And then like sandboxes, and now 2025, I'm really interested in training. I'm really interested in batch jobs. I'm really interested in like low latency, like sort of decentralized, like almost like CDN for inference. I think it's even more exciting to sort of like look beyond, like kind of like how we're like starting to become like more of a multi-product company. And I would also say like multi-industry. Like one of the things we saw in 2025 is starting getting a lot of customers in biotech. So we have some customers like Chai and other ones doing protein folding, and it's just exciting. Like it's just like something. Maybe it's my physics background, but like I think it's like cool. Like they're making drugs, they're making molecules. You know, so starting to see that sort of diversity and the breadth in terms of use cases, and starting to see also in terms of products that diversity. To me, it's like finally like the vision of like Modal as this like general purpose compute platform is like kind of starting to become true, or like it's starting to become like visible. I think.
It's an inflection point. You feel like it's starting to become.
Yeah, I can sort of see it. I can see like this like multi-product thing coming alive, and I think other people can see it too. So to me, that's like the next phase of the company, the next few years. Like we just need to like layer on more stuff.
That's insane. That's so awesome. This is a horribly negative question, but I'm just how do you think it goes wrong if it goes wrong? Just like I think that's a valid question you've probably thought about.
I think there's like a few different risk factors. Maybe that's the way to put it. I don't know if when you like go public in the US, you have to write down like risk factors, and they're always like super negative, like kind of hypothetical scenarios.
Unless you're WeWork.
Yeah, I think even WeWork probably had like risk factors. So a couple of risk factors. I mean, there's always like graduation risk. Like we run with we have a lot of large customers, and there's always a fear at some point that I have that like Modal obviously solves a lot of the issues around the infrastructure that those companies had or have, and they're very happy to use Modal because they don't. It means like they can move faster and they don't have to think about infrastructure in the same way. Eventually, if a company becomes like big enough, like will they just like in-house it themselves? Maybe. I mean, I don't think so. Like, I think we have a product that like scales really well with customers, but like Google is probably never going to use Modal. And so like in the extreme, there's obviously like a large enough company that like will probably never use Modal. But like my hope is like we're building a product that like all the companies up to like the top 10 companies in the US can use us, or top 5, whatever tech companies. So graduation risk is one. I think like AI bubble bursting would be like another one. Like a lot of our customers are downstream from like frontier labs, selling data to frontier labs, or training things, or pre-processing things, or running experiments that don't necessarily like generate revenue in themselves, but like generate like sort of, it's like downstream from like VC dollars essentially. So that to me like scares me a little bit. Although I will say, I mean, we also have a lot of customers who are like downstream from like consumer dollars, which I think is that's always better revenue.
Yeah, right.
Yeah, so that's like another risk. I mean, what are like? I mean, I think like other risks are just like always, you know, just falling behind, and like I don't know. I look at like so many, ramp versus Brex or whatever. Like there's often like a point in time where like there's like a number of competitors, and then one is just like kind of struggling, and like they just like don't iterate as fast. They kind of build the wrong things. People forget about them.
That's
I think that's a
the
big
real
risk.
danger, mediocrity, or just
Yeah, mediocrity, absolutely. And like I think about like a lot of, you know, what's a moat of a startup? There's no moat. It's just moving faster than everyone else and building better products. That's like in almost all cases the only advantage you have, the only differentiator.
right. Just the people's ability at that company, the knowledge, perhaps the organization structure a little bit, maybe, but mainly just
Yeah, yeah. Like you hire smart people, and like you have an organization structure that moves really fast, and is able to build great things, and you have great leadership and all these things. But like that's not a moat per se. Like there's nothing durable about that. Like that can.
it's interesting. It's like you've got the founder of Pixar, Ed Catmull's book Creativity, and he's like, the only thing that matters is having great people. Like if you're trying to make a movie and you give them a bad idea, they're gonna either improve it or get rid of it. But if you give a great idea to a bad team, nothing's gonna happen. So like maybe that's it, not a strong word, but like that's the only thing you can really rely on.
Yeah, yeah. I mean, one of the seven powers, I think, is cornered resources. So you can argue maybe human resources is. I
Yeah.
don't know if that's a stretch, but I agree. Like humans are the root cause of everything, right? Like everything bad or good that happens at a company is like downstream from like hiring good people that can make those decisions and do the right things. So, of course.
I don't imagine the talent quality is hugely different between the two continents. Like, do you think it's literally just the structure and organizational, or maybe a little bit just the cultural as well? Like, what do you think are the biggest things that are different between the US's tech success and innovation compared to Europe?
If anything, I think felt like the talent density is probably higher in Europe. I think there's just such like amazingly cracked people in Sweden, for instance. Like I grew up with so many like incredible engineers. I think a lot of it is just like kind of like just feedback loops, frankly. I mean, US has this like amazing agglomeration effects, I think, where like, all the smart people kind of move to the same two cities, basically. And so I think you end up with these like communities of like, even higher talent density in a way. Like it's not that the country as a whole has high talent density, but in those cities you end up with like incredibly strong communities of like very high talent density people. And I think you create a little bit of like a feedback loop where like success leads to success. Um, I don't know if necessarily like, first of all, like Europe has like more distributed pool. Like, there's like London, Stockholm, Amsterdam, Berlin, Paris. Like, so that means like the human capital is like a little bit more spread out in many different. But the other thing is also like there hasn't been quite as many successes where like people look at that and like they're like, oh yeah, maybe I could create a startup too.
Right. That's maybe
And
why
so
Sweden is so great, because Stockholm, like for how small it is, has had a lot of success.
I think that's right. I think successes they perpetuate, and so once you have like one big startup, like that means there's a lot of talent density. It means like people know how to build companies. It also means there's more capital. So because some of the people who are successful, like now they want to reinvest their capital. So I think it sort of perpetuates itself, and you have those feedback loops, in the Bay Area, right, in particular. But I don't know if you quite have that yet in Europe, and especially also like it's also a question of like career trajectories, right? Like the feedback loop also operates in a way where like if you graduate in like Berlin or whatever, like it's like startup a thing you think about? Like I don't know, but like if you graduate from Stanford, it's like the number one thing you think about is like how do I make money from being at a startup or creating my own startup? It's like the only thing you think about.
Yeah. Yeah. And that either means you start one, you join one, you try
Yeah,
a bunch. There's
exactly. Like so if Stanford, MIT, Harvard, like all these schools. I mean, also like a lot of like mid-tier schools too. Like, I think startup is like on the mind more for all these like crack kids in Europe, in the US, more so than in maybe Europe. But I think maybe down in Sweden, for instance, like you're starting to feel like there's more awareness. London, like I don't know. I think a lot of it has as with that, like the sort of perpetuating self-feedback loop.
those loops. Well, that's probably why you're in Sweden seeing it now, because like Spotify and Klarna some extent as well. And it just takes a while.
Interestingly, it took a few years though.
Yeah.
Because Spotify's been around for a while. Klarna too. I mean, it's been like King and like
Yeah.
gaming startups. Like
King is
it's not until
underrated.
like I don't know what it took too. Like I think the other thing that it takes a little is like megalomania, and I don't know if that's like a cultural thing. Like I actually feel like Sweden has like pretty good history of that because there's like I don't know Vikings or whatever, but like also like IKEA, like whatever. There are like massive international successes coming from a small country. So like I think there's a little bit of that, and I see that a lot in like Lovable and Ligora. They just have these like enormous ambitions. We can do it. Yeah, you can change the world, right? And that's something I admire a lot. And I think it wasn't quite present in Sweden after Daniel Ek until like Lovable and Ligora.
Erik, I admire you for the company you're building and the way you approach it. Is there anything you think we should touch on, or you'd like to say, but before we call it?
Touched on a lot of stuff, so I don't know. I'm kind of drained. I don't know if there's like
You're drained.
what do we miss?
That's not good. You're drained. You need to.
No, that's fine.
I want you to be excited.
No. I was like
Information wise,
I poured my soul into this. Like I
that's
I
great.
said a lot of stuff.
Yeah, I think you nailed it. Where should people go if they want to join, use the product? What should they know? They should follow you on Twitter and they should read your blog. That's for sure.
Yeah, erikbern.com. I'm Bernhardsson on Twitter. Modal.com. It's my company. Pip install Modal if you want to get started. Or just go to modal.com and check out docs or we're always hiring. So you can go to modal.jobs if you want to apply. Yeah, there's like a few different ways to stay in touch.
Great, dude. This was so much fun. Thank you so much. This is
it's great. Thanks for doing this.
Super. No, thank you.
Really enjoyed it.
Your time's way more valuable than mine. I'm here psyched that I even get to talk to you. It's awesome.
That's great. Awesome. Thank you so much, Wouter.
Huge. Appreciate it. All right, Erik. You're the man. Enjoy the rest of your day.
All right. You too. Take care.